It was about time I released my strategy that made me over $4,300 in less than an hour. It's so easy that I think any trader can follow this and easily be profitable. And let's now break down the 3 points of this strategy. So let's start with the first one. We're going to identify where is the market actually going? Your bias, right? So we need to figure out where are we at in market structure. So I'm just going to mark out, going to the upside, going to the downside, both trends, I feel like that's probably the easiest way to start this. And once you get to this point and let's say you hop into a 4-hour time frame, you're looking at it from the outside now, right? And now let's start breaking it down. Let's start figuring out where are we at, not only in time frame, but the biggest part of this strategy is you need to figure out what kind of session are you going to be aiming for. Me personally, I like to, trade the New York, but I'm targeting points in the market in the Asian session. So if it's a high or low, whichever way you're looking at it, if it's going to be longs or shorts. So in this case, I'm looking for longs, right? That cross between Asian session to New York session. When that session is switching over, you should already have 2 things established: where your entry is going to be and your TPs, right? Your TP points are going to be based off of what you're seeing in the Asian session, right? During this time, you're looking for this market structure here. You're looking for it to, let's say in my case, I'm looking for a long. So I looked for it to have a break to the downside and then have a break to the upside. Some people think that's a chalk. Some people have so many different terms, slangs for it. I just want to break it down to exactly what I'm seeing here. It pulls back. Beautiful. You want to see a consistent order flow, if that makes sense. Once you find that kind of order flow in the New York session producing, that's when you can start really looking for an entry here. In a nutshell, this exact setup is what you're looking for in each one of these points. So as let's say it creates a higher high, right? Or in this case, a lower low, right? In that lower high, that's supposedly going to be generated if it's going to be consistent, as in if it's natural and it's going to continue to go in the same direction. The very last thing you want to do is be on the wrong side of the market. So when you go to identify, your daily bias and figure out, okay, what movement am I looking for the day, week, or whatever the case may be. The very worst thing you want to do is not pay attention to the little hints that the market will give you, because that's where you're just going to be blowing your account and blowing your trades. You might even reconsider your whole strategy and your entire, let's say, year of studying. You do not want to be put in that position. Now let's pay very close attention to this market structure. What you are looking at here is what you're going to be implementing in multiple time frames: 4 hour, 5 minute, and 1 minute. Depending on what time frame you find this is what's going to change in this strategy. Now let's go ahead and implement this on the live charts. So what are we looking for? We're already in higher time frame, 4 hour, right? It broke structure to the upside. It's pulling back, but we're going to go ahead and dive a little bit more into this little bit of structure right here. So let's go ahead and mark out what exactly is going on. So obviously it's breaking structure to the upside, right? We had it happen consistently about 2 times, right? So now we're just assuming that the 3rd time it will, follow through and do what it's been doing in previous history here. So with that being said, I have that expectation now. Okay, it's going to break structure as it did, and it's going to pull back, and then it's going to break that previous higher high as expected, what's natural. Now the next agenda is let's go to the lower time frame, 5 minute time frame, and the market's obviously pulling back. That's what we're looking for. Now once we have identified that, it started to pull back, now we're going to look for the market to play out a little bit. We're going to look for this session to come to an end, and that's when we're going to start looking for our setup. All right, so beautiful. We already got the setup we're looking for, right? It broke structure to the downside. I'm just going to mark it out real quick for you guys. And then it broke structure to the upside, just slightly. I mean, it's just getting there, but we're going to let it play out a little bit more. We're going to hop into 1 minute time frame. All right. Now that we have a pretty good view of what's going on here. I'm going to let it play out a little bit, right? But let's go ahead and start marking out the supply and demands and whatnot. Right now we have a supply because we're looking for a long position, right? So we have to look for that transaction between supply and demand. The very next thing we're going to look for is the reactions. That's what makes that supply valid, and that's what helps us understand that this transaction is actually valid. With that being said, we're going to go ahead and mark this out because this is a sweep, and how I view this is there's a lot of sellers here. That causes a reaction, and then there's a lot of people that are probably taking a buy because, you know, they look at it as like, oh, it's a equal low or whatever the case may be on their side, or they possibly see that possible demand area, and that immediately initiates people to go in for a long. Now, that wick is a perfect example of where liquidity was built and then it gets swept. This is a perfect example how in this situation, since the supply is holding, we have two reactions and we have a swept to the downside here. I'm looking at it as I'm not going to even consider an entry. I may look for order flow, but I'm not considering an entry until the supply goes. So as of this moment, I evaluated what most traders are probably, getting swept out, where they were possibly located, because you got to identify where liquidity is, where that liquidity pool was generated and swept. So in this case, after it was swept, now we have our order flow started. That's the beauty of it. Never just take a trade just because you possibly see your entry model. Let the market show you their hand, and trade what you see. That's the biggest thing. So we already marked out the first demand, right? As of this moment, it is respected, but what we're looking for is for that supply to be swept while demand stays strong and holds. And as you can see, that's exactly what we get. So now we have a lot of confluence here with transaction that's definitely happened, right? And we have order flow that's happening. So what I'm going to do is mark out the very last demand that has occurred from the supply being swept. And as you can see, there's an engulfing candlestick rushing to the upside, and then we had a candlestick go to the downside, and then immediately you had a following candlestick that, was the initial candle that broke that supply. So with that, I'm going to use that demand as my entry point. I mean, yeah, you can mark out the fib, but I would wait a little bit. And that's where my entry point is. As long as the stop loss, covers all those wicks. Now it's playing out. Yeah, you can go ahead, and it pulled back. You go ahead and use that fib. I mean, I can, leave you guys the fib extensions if you want, but it's pretty simple. It's probably the most basic fib extension there is out there, honestly. And as you can see, it plays through, and I think it was like half an hour this trade was? Yeah, just about a half an hour, and that trade in itself, I was happy to walk away for the whole week. I was done from that one trade. So let's just recap on a couple things. So this trade took about a half an hour, right? Not much trade management was needed with this. However, I just want to point out that this trade took maybe an hour, hour and 42 minutes in total from the initial setup to it hitting TP. So with that being said, how we can view it is, yeah, it took that much time, and then we had such a great return in such little time, but it was worth all of that time slowly looking at the market. Well, you wasted 2 hours of your day and you just made someone's whole salary in a month. My biggest advice to everybody is don't get upset on the small losses and the big losses. Look at it as a long-term investment. If you're willing to go to college for 4 years or how many years you're willing to do, you can put a lot of time into this and learn a high-paying skill, and eventually it will pay off. And I would highly suggest, if you can do anything to catapult yourself ahead of the line, that, to the top percent, by, let's say, getting a mentor or finding somebody that's a buddy or whoever that has some sort of experience in this industry. I would try to capitalize on that and really take your time in learning this kind of stuff. Because honestly, it gets to a point where you're literally printing your own money. I hope this video helped, and as always, stay profitable.